So you're saying that, I'll go back to the example of the scalpers, those who stay a few minutes. So while I'm just there minding my own business on the 1 minute trend, you're saying that I could actually lose money by not keeping my eye
if you don't know what's happening on the bigger time frame, yes.
Okay, interesting. Now we'll take a short break. We'll come back to look at the combination of time frames that currencies traders can use. I've been talking to Michael Akinwale. He's a currencies analyst and trainer at Forextime, and we're looking at the time frame on multiple time frame analysis, a very key data, a very key tool for currencies traders at the market. We'll be right back.
Our investments are really going down.
What's funny? My chart reads otherwise. Because I understand that laying the right foundation is the key to steady returns on investments, which is why I chose to attend training with Forextime. Forextime is one of the world's leading brokers in foreign currency trading. Forextime has given me an outstanding knowledge base for maximizing my investment returns. As a team, we can take advantage of Forextime training sessions and improve our position. Forextime organizes free training seminars 4 times a week, and their forward-thinking approach helps in equipping you every step of the way.
Back. We're still looking at a multiple time frame analysis, a tool used by currencies traders at the Forex market. Michael has been telling us what that is all about and, of course, why this is important for currencies traders to know and use at the currencies market. Now, Michael, before we went on the break, we were talking about telling you if it's possible for a trader who's on a short time frame to lose money because he wasn't keeping his eye on other time frames.
Sure. To me, it's high risk. It's like... you know, if it's just that we're not yet 100% technologically advanced like some advanced countries, where, you know, let me even leave driving on, let's use pilots. Before a pilot takes off in Lagos, he has an idea of the weather 6 hours away where it's going. So his eye is not, a pilot's eye is not a short time. A pilot's eye is on a long term. So even though a pilot is traveling from in a 15 minutes flight, you still discover that they still give them weathers across the board because he needs to have an idea of what the weather is around even where it's going. So basically, when you trade, you can't afford to just keep your eyes on, you know, just your own time frame where you're going. You need to have an idea of what's happening across the board. So it gives you, so if anything's going to go wrong, you know how to just adjust yourself immediately. So you're not caught off guard. Then I think it's also important that traders trade with the trend. If there's anything they teach you is that the trend is your friend. So you don't want to trade against the trend. Some traders do that.
When you say trend, that's when the currency is moving up or moving down? Or?
You know, when price moves in a trend, it doesn't mean that it's going to keep going in a straight line. It goes up, it comes down, it goes up, it comes down. And because it does that, traders who trade reversals or they trade pullbacks do some of those pullbacks. But those are really people who have mastered their Fibonacci and pivot and all that. People who have not mastered that might not be able to know where those pullbacks are happening. So it's really better to stay with the trend. You know, so if the trend is up, for instance, and because you are looking at a short time frame, because when you look at a pullback in a smaller time frame, it seems like a trend. So you're not an experienced trader, you didn't know that it was a pullback, you thought it was a trend downwards, and you go place a sell while the overall trend is up, then you're going to lose. So that's what happens to a lot of people. They just stay on one time for maybe 15 minutes, and they've seen a downtrend, whereas the overall trend is upwards, and you know they keep complaining that the market is working against them, whereas they're working against themselves because they don't look at the bigger time frames to see what the market eventually actually wants to do.
Do you tell or teach your students, especially the basic classes, this particular? Because if you say that many traders still do that, so I imagine that of course those who pass through Forextime,
a lot of novice or beginners actually has that issue, you know, because when you first trade, and this is what happens to you when you first start to trade Forex, you tell yourself, I want to stay on 5 minutes because it's fast. You want to make money fast. That's what happens to a lot of beginners.
And you want to avoid, you know, risk. You want to avoid risks that, you know, are beyond you as an amateur
something like that.
Trader.
So you go in there in 5 minutes, you start losing money. You're like, okay, maybe the 5 minutes too short. Let me go to 15 minutes. You go to 15 minutes, you have the same problem. Okay, let me go to 60 minutes. Eventually, you begin to see that the issue is not the time frame, but the fact that you're not taking cognizance of all those other time frames in making your analysis. Because you have to be aware. For instance, most professional traders don't analyze on their time frame. Let's assume your time frame is 15 minutes. You don't start your analysis on 15 minutes. You go to daily or 4 hours to go and look at what its price going to do today based on those long time frames. Then if you know what's going to do today, then you go and look for short opportunities based on what it wants to do. to go and make profit under your time frame. So even though you have, because it's good for traders to have your time frame. For instance, your time frame could be 5 minutes, your time frame could be 15 minutes. But that aside, you need to have bigger time frames where you go to and do your long-term analysis to know what price actually wants to do before you go to the small time frames and make your decisions.
Yeah, now that we have established the fact that it's not so wise to just stick to one time frame, how can a currencies trader successfully juggle or multitask, combining multiple tax rates?
Now, there are some. I'll talk about that last. There are some basic concepts. They are not cast in stone. It's not like they're 100% like that. But it's good to just have an idea. Okay, these are the multiples you should use. But before I do that, I just want to show us an example. We're looking at let's look at Euro USD 5 minutes, for instance. Euro USD 5 minutes. If you look at Euro USD 5 minutes right now, can we just zoom into it?
I'm sure they'll get around to that. Just tell us what...
If you look at Euro USD 5 minutes, you can see that we have a red candle there. It's as if price actually wants to come down. But if you go to the, let's say, 4 hours, if you go to the 4 hours, you'll discover that we're actually in an uptrend.
Okay.
Now, a trader who is looking at just that 5 minutes will actually start thinking of just selling and selling and selling and selling, without understanding that on the bigger time frame, we are actually just having like a consolidation on the uptrend that happened on Friday. So if you're not conscious of going to the bigger time frames to establish the long-term trends, then you're always going to be short. Then, even from my own experience of doing a lot of, I build a lot of trading systems. When you're building trading systems, you're building a robust system that while you are not there, that software can actually make decisions for you.
On its own.
Okay. On its own. One of the things that we do is that on the big time frame, sometimes on the weekly chart, we'll go and establish the long-term trend. Then you come to maybe the 1 hour time frame or the 4 hour time frame, and with some other tools, you begin to just pick the short trends, but you don't trade against the trend. That's something we try to do most of the time. You don't trade against the trend.
Well, is it easy to handle if you have multiple time frames all open and you have to monitor? I know, like you said, you have it's automated in a way, and but is it easy? Is it actually easy to juggle?
This way it works. Most of the time, the bigger time frames don't move so fast. For instance, a daily candle will take a whole day to complete, right? Whereas a 5 minute candle, every 5 minutes something is happening, it's changing. Every 5 minutes, the candle is completing and now it's starting. Therefore, immediately you establish your trend on the big time frame, you don't really go there constantly to go look at them, because you've established a point on them. So, for instance, you're looking at a daily chart, you don't need to go to the daily chart every day or every 5 minutes looking at a daily. No. A daily, maybe every 6 hours, look at your daily chart. So it's not like it's tough juggling. You only need to juggle when you're on those 5 minutes or 1 minute or, those very small time frames. That's why you need to keep looking and looking and looking. And that's even for traders who we call like day traders or scalpers. For people who trade and go to work, for instance, you place a trade and you go to work, immediately you look at your long-term frame and you establish a trend. You come to a smaller time frame and you establish a short-term trend. You just place it, you put your take profit and your stop loss and you move. It's not like you have to sit down there and juggle and juggle and juggle constantly. Okay. It's just that those are the points you look at before you make your trade decision, and you either sit down there or you go and do whatever else you have to do.
Are there any challenges or risks that a trader, particularly an amateur trader, should look out for or would encounter, and how can that trader deal with that?
What do you mean, risk?
Challenges in handling maybe the software or something that may come up that might be unexpected.
So many times when you're starting the trading business, especially if you're not very computer savvy, some of these things look complex to you, but when you begin to actually use it a lot, you begin to see that they're as easy as writing your name, basically. So when it comes to juggling through all these charts, it's pretty easy. For those who know,
for those who have learned it as they were, because you make it sound easy, you make it look easy.
It's that easy.
Okay, let's look. What's the best time frame combination that a trader
Okay, let's look at it. Let's look at it now. If for traders who trade on 1 minute chart, it's recommended that you go to the 5 minute chart and 30 minutes chart to confirm
at the same time.
To confirm the trend. So that means the 30 minutes is actually going to be your long-term trend, where the 5 minutes becomes the medium-term trend, and the 1 minute begin to be where you make your decision. This is like clearly for scalpers. Now, for people who trade on the 5 minute chart, then they have to go to 30 minutes time to confirm the short-term trend, on 4 hours to establish the long-term trend. Now, for those who trade on 15 minutes, they have to use the 1 hour to establish their short-term trend, and 4 hours the long-term trend. So if you look at it, for someone who trades on 4 hours, for instance, it needs the daily to confirm the short-term trend and the weekly to establish the long-term trend. Now, these points are not cast in stone, basically, 100%. But these are the mindset that traders should have when they're looking at the market to make their trade decision. So if you're a trader that trades on 5 minutes, you can't afford to stay on that 5 minutes alone to analyze the market. Go to the 5 minutes chart, establish a trend there, they go to 30 minutes to establish the long-term trend. You know, if you look at that 30 minutes that we're looking at, talking about to establish the long-term trend for a scalper, it's even like it's less than the starting point for somebody who is a long-term trader. But those are the points that traders should have in mind when you're making your trade decisions.
So is it this tool, is it a standalone analysis or tool, or is there any other similar one that a trader can use hand in hand with this time
Now,
frame?
if you check what I'm talking about right now, I'm just looking at time frames.
Okay.
Because when you go to, let's say, 15 minutes chart, you want to establish the trend. It's not the 15 minutes that establishes the trend. No. There are tools you have that establishes the trend on that time frame. But what it means is that if that same tool establishes a downtrend on a 15 minutes, and on your 4 hours, that same tool will establish an uptrend. Because you want to obey your long-term trend, you will not place that sell on your 1 hour, just because your 4 hours is telling you otherwise. So you want to wait for your 4 hours to confirm whatever this one is saying also before you make a decision. So you want all of them to rhyme. So many times you want to tell yourself, if I'm in buy on the 4 hours and I'm in buy on the 1 hour, then when I get to buy my 15 minutes, I place my buy. So you want to get all those 3 time frames to confirm before you actually place your trade decisions. So it depends on you as a trader. Most of these things, you have to test them out until you're able to come up with a combination of time frames, a combination of indicators, a combination of tools that together work together to give you consistent profits. And that's what trading is about.
Interesting. Now, finally, Michael, before I let you go, what should we be expecting this week going forward? It's the first trading day of the week, and as you said, that the dollar is coming from a weak point from Friday, but any chance of it strengthening this week?
Well, from like what I would call the consolidation we've had on the Euro USD, we expect that either the trend is going to continue upwards or it's going to come back downwards. But right now, what the price is doing today is that it's been consolidating downwards, like, you know, but I don't see any serious trader actually selling the Euro USD right now. Everybody's waiting to see it establish a new trend before they're actually going.
Okay, yeah. Thank you so much for being here. Thank you so much for your insight on that. We have been looking at the time frame, multiple time frame analysis, and as Michael has said, particularly for scalpers, if you are a scalper that you spend just a few minutes at the market, do not rely on just one time frame alone. Learn how to juggle multiple time frames. That would, of course, help you maximize profit. Of course, that's what it all boils down to at the end of the day, maximizing your profits at the currencies market. We'll take another quick break now, and we'll be back with the rest of the program.
Our investments are really going down.
What's funny? My chart reads otherwise. Because I understand that laying the right foundation is the key to steady returns on investments, which is why I chose to attend training with Forextime. Forextime is one of the world's leading brokers in foreign currency trading. Forextime has given me an outstanding knowledge base for maximizing my investment returns. As a team, we can take advantage of Forextime training sessions and improve our position. Forextime organizes free training seminars 4 times a week, and their forward-thinking approach helps in equipping you every step of the way.
Welcome back. Let's go over to our earnings board now. Of course, investors